Looks like the markets are trying to rally after we got the Fed minutes. Let's talk to Larry Adam. He's the Chief Investment Officer at Raymond James. So, Larry, we heard from the Fed minutes. It looks like the hiring is still far from the Fed's optimum, right? So what signal does that send to you in terms of the sectors that you like right now?
Well, first of all, I think the Fed's remaining, still concerned about employment means that they're going to be on hold for a long period of time. I think one of the things that was worrying the market was that they were going to come back and raise rates sooner than what people had expected. And I think that pretty much puts that off for the foreseeable future. As far as the sectors that I continue to like the more cyclical sectors. We like technology, communication services, consumer discretionary, financials, and also industrials.
So the minutes that you heard from the Fed today, the idea that they're going to still stay lower for longer, does that continue to give you a green light to buy those sectors?
Absolutely. With them remaining on hold, that'll keep the momentum underneath this economy strong. That'll continue to help with earnings growth, and that should help those sectors do the best. And in fact, don't forget, we got earnings season starting next week. And I think we're going to get the early signs that these are the sectors that you want to continue to be in, because this is where the growth continues to be.
Now, I know you like information technology and you like the communication services sector. And when I looked right before our interview, it looked like a lot of the big cap, large cap tech names are at record highs right now. So are you still interested in buying in those big cap tech names?
Yeah, we still like those big cap tech names. And I think one of the things that's starting to come out into the press now is finally that these big technology companies are also part of the reopening trade. We've been saying this for a while, but with all the money that's out there in consumers' bank accounts, what are they going to spend on? Well, I still think they're going to continue to spend on technology. Everybody wants to focus on that reopening trade. And when they talk about reopening, they're talking about restaurants and hotels and airlines. Well, how are you going to get people into those airplanes, into those stores? You're going to have to advertise. Well, what's one of the best ways to advertise? It's through the internet, the digital ads. That continues to grow very significantly. That'll help those communication services companies. So the sectors that we like are still part of that reopening trade.
I'm wondering how you're feeling about the market. Last week we saw yields on the 10-year note really, tick up significantly. But we've seen since then the yields have rolled back. Not a lot, but, comparatively. So how does that weigh in this debate about inflation versus growth?
Well, first of all, I'm not overly concerned as if interest rates go higher. I'm not overly concerned if inflation ticks higher. Actually, I'm not overly concerned if, in fact, we do see the Fed eventually tighten rates over the next 2 years. I think there's a lot of false narratives in the market. And that false narrative is that the reason those rates are going higher, that inflation is going higher, and that people want the Fed to possibly act is because the economy is so strong. And when the economy is so strong, it's going to flow through to earnings growth. And that's ultimately what drives equity prices higher. So I'm not overly concerned by the uptick that we've seen, again, in rates and inflation.
So if you're not overly concerned about that, what are you concerned about?
Probably my biggest concern, there's actually two of them. Obviously, there's one we really can't control, and that's a variant of the COVID, which would ultimately start to challenge this reopening process of us getting back to normal. And by our research, we think that we really could be back to a normal economy by July. And that's when you really see the full opening of the economy. The other thing that gives me a little bit of a pause for concern is that we do a investment strategy survey every quarter. And this past quarter, 95% of the recipients actually thought the equity markets would be higher between now and the end of the year. That's a lot of optimism. So having a little bit of a shakeout here and there to maybe get some of that uber optimism out wouldn't be a bad thing. But that's one thing that does concern me right now.
All right, great. That's Larry Adam. He's the Chief Investment Officer at Raymond James. I'm Conway Gittens, and this is Reuters.